This week was probably one of the most volatile trading weeks that I have had in my career. Now, as you guys can see here, Monday started out great. Tuesday was even better, my best day of the year. But Wednesday was the worst trading day realized that I have had this entire year. And so what I want to do this week, since we've covered strong and we actually ended up closing the week out profitable for a $22,000 profit, is I want to sit down with you guys and really explain how we were able to do this, how we were able to close out today with such a strong return. And more than anything, we're going to go through line by line each and every single trade. But more than anything, what I want to put forth in this video is the fact that you need to be using proper risk management. You cannot run from losses no matter how good you are, no matter how amazing your trading strategy is. There are going to be times where even the highest win rate percentage trading strategy is going to lose multiple times in a row. And on Tuesday, we took 32 trades. I'm sorry, on Wednesday, 32 trades. And you can see how many of these trades in a row ended up losing. And so you have to understand that the most important aspect when it comes to trading is your risk. So let's take a look at my day today because we had a really, really good day. The majority of these positions are day trade, basically starting here from SPY all the way up. Every single one of these were day trades. And then the swings that we ended up closing out today was team puts for a solid profit, MongoDB for a loss, Airbnb for a profit of 27% or $5,000, and then Delta. So let's start first with the swing trades, just because they're the easiest setups. And the thing I want you to understand too is that each and every single one of these trades today was off of the same exact playbook, which is going to be break of structure, which is what the same exact trading strategy we trade here. You can see on Wednesday we had all break of structure as well, but this is a very, very simple strategy that we teach within our community. It's all based off of multiple touch points of support and resistance, retesting of levels, and then looking for lower lows or higher highs. So let's get started first with team. Yesterday, I posted in our private academy that I was going to be picking up 10 of these puts at 2:31 p.m. My average entry was 1335, and you'll be able to see that these are the executions that we ended up taking. We only ended up getting in with one order. I never got to average down. And the reason that I was taking this position was because we had break of structure here, where price had bounced back up, and we were watching for that rejection point at $195. And if you see, we pushed directly right up to market bias as we were expecting. We started our position watching for that resistance to market bias. I wanted to add if we hit 202, which didn't happen. Instead, we ended up rejecting and we sold off down here to 189. Now, the reason that I ended up closing my position instead of holding down to this initial target of $188 is because we have a very strong liquidity level here sitting at $190. The way that we can tell is that we have our Pine Wave indicator up, but even if we didn't have this Pine Wave indicator up, the easiest way to tell is just by looking at the areas on your chart that price is too perfectly bouncing off of. I mean, if you look at price action here, each and every single time a 4-hour candle pulled back into this zone, we instantly bounced, knowing that if we come back down into this zone once again, there's a very high chance that we're probably going to bounce. Now, I think that we will probably break through this support, but that's not going to be till earnings next week, and I don't care to be trading earnings for this trade, so I decided to cover my profit here today for a $2,250 win. Next position is going to be MongoDB, which we entered yesterday at 210. And this was one of those trades that when I took it, I knew that there is a very low chance that we were going to actually make money on this. We entered yesterday when it was trading around $334. And we know that most of the time when we get this break of support back here at 365, it will sell off, try to catch a bounce, and then move our way back up to higher high. While normally we have about a 75% win rate, I knew that entering MongoDB down here at this lower low was going to give us a much lower chance of profit, but I also knew that it was going to give us a massive risk versus reward if this panned out the way that I wanted. From where we were yesterday back up to highs of 384 over the next 3 or 4 months, that's almost a 14% return. With a stop loss sitting at a lower low, which we got tagged out today, that was going to be about a 1.5% loss. And overall, eating a $3,600 loss sucks, but it was only 11% of our position. So I know that that's not ideal, but these are the the types of trades that, I would still take that trade again just because of how solid the risk versus reward was. And I would take a stab at the fact that it was so oversold. Airbnb is another one that we ended up getting puts and it played out to absolute perfection. So we ended up filling here, you can see on the 18th, which was yesterday at 9:44 a.m. And at the time, we were watching this push back up into this 163 level. So if we take a Fibonacci retracement from swing high here at 166.40 down to this swing low and pull it out, you're going to notice that the 0.618 level right here, this is our rejection zone. So in most cases, we will push up into this level, reject, and sell off into lower lows. So you can see here that I did sell at 12.45 today, and you might be thinking to yourself, well, why didn't I just hold until we hit my target? My planned target is not even here at 154. My planned target was all the way down here at $150. And the main reason was, number one, my position was up pretty drastically, 27% on a pretty sizable position. And being up $5,000, I was really happy. The second aspect is this week I got my teeth kicked in, like we talked about in the beginning of the week. So being able to bank some profit, I was pretty happy with that. And the second thing is that we're testing these lows again. So there is a chance that we bounce off of this support level. So I was just happy to take my profit and walk away from the trade. The last position that we closed out as far as swing trades today was Delta. And this we called out on the 17th. You can see we got some May 17th puts. And this was a really, really good trade, but I ended up closing this out pretty early. If we go to the executions, you're going to see we entered one time with 100 of these. And the reason that we were looking to get in is because even though we're in a very strong uptrend, right? If we were just to take our trend line and run this up, we're in a very strong uptrend. You'll notice that we have a strong liquidity zone. And we talked about this earlier when we were going over the profits that we were taking when it came to SPY. But you guys can see here that at this point, if we draw out this price level here, we have multiple times that price was unable to get through $49.50. And so as we saw price coming back into that level on Delta, even though we're over the market profile, which is something that I really don't like to do, I decided to take my put position on it, look for this rejection level here, this continued sell off, and my plan was to hopefully come in and actually take profits down here at this liquidity level of about $45.50. But I ended up getting, I don't want to say scared out of the trade, but I ended up just closing it out because I wasn't able to build a big enough position. We're still in an uptrend overall, which I'm not a massive fan of, going against the trend. And I just felt that in general, the smart thing was probably to cover my trade. Now let's move into the day trades. There's a good bit of them, but we will be able to get through them rather quickly. Let's start with the first trade of the morning for me, and this was going to be on the S&P 500, and this was SPY puts at 9:42 a.m. And I said 2-minute BOS on SPY with an order block at $500. So this means break of structure. These SPY puts this morning was absolutely perfect. We made 10% in about 6 minutes and we closed $4,500 in profits. So this is from the morning here, 9:42 a.m. and I posted to the team 2-minute BOS, and BOS just means break of structure. So I said 2-minute BOS to the team with an order block at $500, looking to go short if we test $500.20. So my reasoning to go short at $500.20 and waiting for this to occur here was because we have a bearish order block sitting here. This order block happens because when price comes up and gets slapped down here like we had before, there is a ton of sell limit orders sitting in that area, which means that in most cases, the S&P 500 will push back up to test this level before potentially rejecting. So my plan was, once we got up into here, we were going to enter short with a stop loss on a higher high where that order block is, and then to take profit not down at a lower low, but because we have these liquidity zones sitting here, that's what these purple levels are, instead I'm looking to take profit right at that liquidity zone. You can see that my first execution was here for 100 of these contracts at 9:44 a.m. So at this point, 9:44, this is where we get this initial impulse up. And I got in before we hit the level that I really wanted. But as price continued to move into that level, I actually averaged in with 50 more of these contracts. So I actually paid $2.94 the first time. Then I got a solid deal at $2.81 as we pushed up into this level. If we go back and let that play out, you're going to see that price came up, tapped into that order block, and then rejected. this is where we ended up filling on our average. At this point, we see a very swift rejection and a drop back down into this level. So on this next 2-minute candle, I know now that price, because it likes to come back and test these order blocks, is going to most likely pull back down into this order block, hit our level here of $498.88, and bounce very quickly, probably, off of this liquidity zone. So my plan was to get out as fast as I humanly could. We see price sell off here, and literally 6 minutes later at 9:50 a.m., we cover for $3.24. And price does exactly what we expected, comes back into the block. We covered our profits here for a very nice return. And then at this point, we allowed it to come back up and bounce. At this moment, I did not go short again, but I probably could have ended up going short as we came back up into this 0.786 Fibonacci and then probably played it back down to our liquidity zone, which ended up happening here. And then at this point, what we would normally be looking for is to see if this liquidity zone breaks. And if it breaks, then we play the drain all the way down, which I think is what ended up happening for the rest of the day. We had another trade today for the S&P 500 that was solid, but I want to look at this Microsoft trade with you guys very briefly because I think that this is something that will also help. The Microsoft was 3 entries in order for us to make about $2,800. And this was something that ended up actually being profitable and something that I would have made so much money on, probably 12 grand if I would have held. But I want to explain to you where I went wrong, why I closed it early, and why I wanted to walk away from the trade. So initially I ended up entering here, you can see at 1321, and at the time on the 15-minute chart, we had just broken structure, broke through $399.50, and I thought that there was going to be a pretty high chance that we were going to push back into this order block before rejecting down into a lower low. But I was of course a little bit worried because I knew that the market was going to sell off and I wanted to get in a little early. So what I did was, instead of going in with the full massive 70 positions that I wanted for my puts, I went in with 20 and I paid $8.15. We watched 15 minutes go by and we get a massive impulse in price. As price is pushing up now in to test this order block, I average down one more time. This time I pay $7.90, and then as we're pushing even higher, as we're testing this market bias here, which we teach in our academy, at this point, I average down with my last bit. My point at this level now is that if we reject here at this market bias, we're going to drain into a lower low. And if not, we're going to break up through this high and probably rally for the rest of the day. So what happens is we see price reject, we see price sell off drastically, and I close my profit down here at this equal low. I know that price will probably continue to sell off, but I was up so much already today that I decided I was going to walk away because I've had a very stressful week trading. And of course, as soon as I do that, we end up getting a little bit more of a sell off down here to 397.71, and then after hours right now we can see that Microsoft is trading down here at about 397. But it was still a very solid trade, very, very good trade, made 5%. But if I was just if I would have back here, instead of entering and starting my position around here, if I would have just waited for my optimal trade entry up here at 402, it would have been a much better position. So I hope this video helped and gave you a little bit of insight into how I trade and the fact that we are using literally the same exact strategy, the same exact indicators on swing trades, day trades, 4-hour time frames, 5-minute time frames. It doesn't matter. What you want is a system that you will follow to a T, that is very simple, but still has guidelines that must be met. And if you guys want to do that and trade this system with me each and every single day, go and check out our Discord community down below, where you'll get access to every single one of my trades live as soon as I take them, access to all of our private indicators, as well as all the ones that you see on our screen, all of our courses, all of our seminars, live streams, and all of our private trading bots. Thank you guys for all the support. The link to that is going to be in the description. And I'm going to be honest with you guys, it is going to go up in price. It is $49 a month right now. And once you're in for life at that price. You're grandfathered in. But now that the Discord is growing so much and we're approaching much more members than I really want to manage, we are going to be raising the price to $99 per month because we have more than proved that it is worth it. So go check it out. Go get your price forever over there as an early supporter. I'll see you guys next time.